Hey everyone, welcome back to UJXanti. In this series, we try to understand whether Bitcoin's current rally resembles more with 2019 rally or with 2020 or 2021 rally. In the first part, we discussed gold breaking out of its multi-year resistance zone, and gold's breakout in 2024 suggests that we are in line with 2019 rally. Today, in part 2, we are going to discuss Bitcoin's dominance, and we are going to understand today's environment, today's conditions, and compare it with these two very different rallies. Let's start with Bitcoin dominance. Let's overlay its chart on BTC price. Yellow will be more visible, I guess. Here in yellow line, we have Bitcoin's dominance. In simple terms, it is just a measure of Bitcoin's market cap divided by the overall crypto market cap. So whenever Bitcoin dominance goes up, for example, this process, whenever Bitcoin dominance goes up, it means that money is moving from altcoins to Bitcoin. It means that Bitcoin's market cap becomes higher compared to the altcoin market. And whenever it goes down, for example, we had a scenario like this where Bitcoin dominance fell off a cliff. In this case, it means that money moves out of Bitcoin into altcoins. It's very important to understand Bitcoin's dominance chart. We cannot take it to the bank, but we can understand it and analyze it for other actions. So whether you want to buy altcoins or whether you want to buy Bitcoin, you need to have a look on this chart, the chart of Bitcoin dominance. Let's now go to the two rallies that I've mentioned, 2019 and 2021. Let's have both charts in logarithmic mode. Yep. Now we are set to go. And we will see here that those two rallies had differences from the viewpoint of Bitcoin's dominance. This is the rally of 2019. It was a short-lived rally. And we see that Bitcoin dominance went up, while Bitcoin's price in USD terms went up for a couple of months. Here we have relationship where both of these indicators, both of these charts, go up together. However, when we come to the next rally, 2021 rally, which started after pandemic recession, when there were like abundant stimulus in the US and elsewhere, we had this parabolic rally. And we can note that at first Bitcoin's dominance was in sideways action. It went down a little bit, then spiked up, and after that it fell off a cliff. Overall, the trend was that Bitcoin dominance went down. And we can measure it like this, or we can just exclude the sideways action and start from here. But no matter of your preference, the result is that in the first rally, 2019 rally, Bitcoin dominance went up with Bitcoin's price in USD terms. And in the second scenario, in 2020 and 2021, the 2-year long rally, we had Bitcoin's price going up, going vertical actually, and Bitcoin dominance plummeting. This is a major difference, and we should discuss it thoroughly in order to draw some profound conclusions. And now let's just come to today's environment. We see that The rally that started in early 2023, the rally that we are currently in, resembles more with 2019 case. Why? Because BTC is up in USD terms and Bitcoin dominance went up. It had higher lows and higher highs. The bottom was close to 39 or 40%, and right now we are above 54%. Let's have a look. Right now we are 54.3%. Now let's understand why that is the case. Why we have Bitcoin's price going up in the last year or so, and at the same time Bitcoin dominance going up with it. And why was that the case in 2019? And why that was not the case in 2021? So what's the difference between these two relationships? So we have positive correlation. Bitcoin's price goes up and BTC dominance goes up. Here we have negative correlation. The price goes up and the dominance goes down. We just need to understand the logic of these movements. There are many factors at play. However, the bottom line is that it depends on investor outlook, whether they are optimistic or pessimistic for the future. If investors are optimistic, it means that they will take on more risk, and it means that they will move their money, their capital from Bitcoin into altcoins, because altcoins are more risky and they provide more reward. Not all of them, of course, but the general market of altcoin can be characterized as riskier than Bitcoin. And historically, from the last two cycles, altcoins on average have higher returns than Bitcoin. Of course, for a specific period of time. Whenever people move their money into BTC, then BTC dominance will go up. Here is the case. In 2019, people moved their money from altcoins into Bitcoin. It means that they are not optimistic. And the reasons there can be many reasons. For example, the macro environment is one of the major reasons. Then another reason can be geopolitical risks. And of course, we have some other risks at play. However, the main risk here we had was the inversion of the yield curve. So let's go to the chart of the yield curve. Here we have 10-year and 3-month treasuries. This chart is just the yield of 10-year minus the yield of 3-month treasuries. And in simple terms, in a healthy, normal environment or economy, the longer the treasury, the more yield it should provide, because you take on more risk. It is for 10 years. You are going to get your money back in 10 years, not in 3 months. And logically, you should be compensated more. However, there are some rare instances when that is not the case. And 3-month treasury provides higher yield, annualized yield, than the 10-year treasury. And whenever that happens, this chart goes negative. And we just call it like inverted yield curve. And we can see that in 2019, we had inverted yield curve. The curve inverted in May, and that's the case in the last 2 years, almost 2 years. We had our yield curve inverted in 2022, late October. Here we have it as well. So the same chart, US 10-year yield minus US 3-month yield. And we see that currently that 3-month treasury provides approximately 1% extra yield, annualized, of course, 1% extra yield than the 10-year treasury. And this should not be the case. This indicates that the economy is not healthy. It's not a normal environment. And historically, when this happened, when the yield curve got inverted, which is when it went negative, that's here in 2019, that's our current environment. Then if we go back, for example, that was the case in 26, 27, usually a recession follows. This is an indicator that shows that the economy is not healthy and usually a recession follows. And when we come back to today's situation, so we see that we had an inverted yield curve in 2019. It signaled a recession. We had a recession. Of course, it was partially due to the pandemic, which was a black swan. So it was not priced in. And currently, the yield curve is again inverted. And again, this is a signal that the economy is not healthy and that there is a high chance that we will have a recession. So it means this is a signal for investors to have less risk appetite. And when they have less risk appetite, it means that they will not ape into the altcoin market. They will take their altcoins, the capital from their altcoins, into BTC because BTC is the safest crypto that there is. So if they want to have an exposure, they'll just go into Bitcoin. That was the case in 2019 because the yield curve was inverted. There was a significant signal from the bond market to the crypto investors, not only crypto investors, of course, but for this matter, crypto investors, indicating that the environment is risky and it's better to be in safer assets. And of course, the safest asset is Bitcoin. So that's why Bitcoin dominance went up when we had a Bitcoin rally. After that, let's just compare it to today's environment. Today, we see the same scenario playing out. Bitcoin price goes up and Bitcoin dominance follows the same logic. So it goes up. The reason is, again, very similar. We have an inverted yield curve. In fact, it is more than 18 months inverted, which is one of the longest inversions of the yield curve. And again, it indicates that the US economy is not healthy. And there is a high probability that we will go into a recession in this business cycle. And this is a signal for investors to move their capital from altcoin market to BTC or not invest in altcoin market as a whole. That's a signal for them. That's why we see Bitcoin going up in price in USD terms. And at the same time, Bitcoin dominance goes with it, with higher highs and higher lows. In addition to 2019 scenario, we have geopolitical risks. Maybe in 2019 we had geopolitical risks as well. However, it's not comparable. Currently, we have multiple wars going around in the world. The risk of geopolitical conflict is much higher, and that, of course, influences this rally of Bitcoin dominance as well. Because if people are uncertain of the future, if there is a risk of new conflicts and wars, it's better to be in safer assets. And if you are in crypto, the safest asset is, of course, Bitcoin. And now let's compare these two similar scenarios, 2019 and 2024, with the other scenario, which is 2020 to 2021 rally, which was like the mirror opposite of these two scenarios. Here we had Bitcoin price going up, vertical, it was the parabolic rally. However, we see that Bitcoin dominance at first went sideways. However, like in the big picture, it just plummeted. It just fell off a cliff. Here, it was just down, only down, no sideways actions, nothing. It just went down in a couple of months. It was it was above 70% and it ended up to be around 40%. That's a massive action. That was quite fast as well. It was only a couple of months. Why this was the case? Why we had a very different scenario playing out in 2021 than we had in 2019 or now in 2024? The main reason was that in 2021, the economy was in a much healthier shape because we just got out of a recession. And the second reason, of course, was the stimulus, the abundant stimulus in most of the major economies, namely the US. And that stimulus, of course, resulted in a liquidity, and that extra liquidity found its way to every market. Stocks, and of course, like crypto was not an exception. And that extra liquidity, excess liquidity, found its way to the crypto market as well. Let's just have a look at the Federal Reserve's balance sheet. The blue line here indicates the balance sheet of the Federal Reserve, which is the central bank of the US. We see that when the recession started in 2020, Fed started to print a lot of money and we started the QE, which is quantitative easing, of course. And when it started to print money and then the treasury gave stimulus to everyone, that excess liquidity found its way to the crypto market. As we can see, that was the moment when Bitcoin had a local bottom. And after that, the parabolic rally started. So in simple terms, if we compare 2021 to 2019 or current environment, the difference is that in 2019, the economy was in much unhealthier shape because of the yield curve inversion. We had a quantitative tightening, which is the opposite of quantitative easing. It means that the Federal Reserve takes money out of the US economy, and that is indicated by this negative slope of the blue line. That's the case here in 2024. The yield curve is inverted, which indicates not efficient and not healthy US economy. And also we see that we have QT, quantitative tightening, which means that the Federal Reserve takes liquidity out of the US economy. And we see the exact opposite in 2021. The yield curve is not inverted. The economy already was in a recession and now it is in a much healthier state. And also we have a major QE round. Actually, this was the biggest QE that the US has ever experienced. And that QE results in a higher liquidity. And that higher liquidity or excess liquidity finds its way to the equity market, to bond market, of course. And crypto assets are not exceptions. It found its way to crypto as well. And BTC and altcoins, they rallied here. And whenever the conditions are good, whenever there is no recession in sight, the economy is in much healthier state and there is quantitative easing. Of course, investors are very optimistic. And when they are optimistic, of course, they'll take on more risk. When they take on more risk and you are a crypto investor, you will not buy Bitcoin or Ethereum. You'll go into altcoins. And that's what we see here in Bitcoin dominance chart. BTC dominance went down because people, investors, new entrants, anyone that participated in these 2 years, 2020 and 2021, they just moved their capital into the general altcoin market. They were very optimistic, they took on more risk, and of course, altcoins were their choice, not Bitcoin or Ethereum. That's why Bitcoin had a rally in USD terms. However, altcoins outperformed Bitcoin in this short period of time, in this 1 or 2 years. That's very important for us to analyze this information to understand whether we are in 2019 scenario now or in 2021. And that's why it's very important to see the big picture. In order to understand where we are headed next, we need to understand the conditions and the environment of today's rally. And today's conditions and environment from the viewpoint of Bitcoin dominance and in extension, the yield curve inversion and the QE or QT, we can state that today's rally resembles more with 2019, much like the gold breakout that we discussed in part 1 of this series. So it shows that Bitcoin dominance goes up with Bitcoin's price, much like 2019 scenario. The conditions are the same, yield curve inversion and QT. We have QT and yield curve inversion. And we just need to be open-minded. Let's just get rid of the balance sheet of the Fed. We just need to be open-minded because we see that in 2019, even before the COVID pandemic recession that we had, even before that, in the 6 months following this rally, we had more than 50% correction in Bitcoin. So to put things into perspective, if we have a 50% drawdown from the current level, approximately 52%, that was in 2019, it will put us in mid 30K range. This is contrarian view, of course, like no one wants to hear this number, and most of the people will not believe that we will visit 34K again. However, this is a scenario that should be argued for because in 2019, almost everyone was so bullish that they were anticipating a new all-time high sooner than later. However, after that, we had a 50% correction. Then we had the COVID recession. And only after that, the economic conditions were good enough for us to have the parabolic rally. Currently, the economic conditions are not good enough for us to sustain this rally. We have the yield curve inverted and we are in a QT. So we should be open-minded, and maybe it's not going to be 50%. However, there is a good chance that we will see a correction before seeing a new leg higher. If you found this topic interesting and informative, please like and subscribe and let me know of your thoughts. And I'll see you next time.